Hey everyone, so it's time for our stats review. Obviously these market updates have become a little repetitive in the last few weeks. Everybody keeps preaching the same thing. Inventory is very low, but they don't give you any context or numbers usually to back that up. So what we did was we looked at the 10-year trend of listing activity. I've got those numbers here in front of me, and I'll try and digest them as best I can for you without starting to sound like Rain Man. So in terms of the numbers, we are an all-time low for inventory levels. So if I look at the 10 years, the only year that comes close to this is 2016. We all know the market we experienced that year, where we saw about 27,500 listings. Now, I pulled from the Hamilton, Wentworth community and Oakville, Burlington, Milton communities. So that pool there of GTA markets, just to give us a rough idea as to what's been occurring. This year, we were at 24,752 for the year. So that's even lower, obviously, than 2016, but more importantly, it's 31% less than what we saw in 2019. We're still seeing similar levels of demand, of course, if not more demand, because we've got so many people from the 416 area code in Toronto, particularly condo owners and tenants, looking to buy their first home out into these more suburban communities. So the big push has obviously been in historic trends was to buy into Oakville and Burlington. But these markets, the prices are actually becoming inaccessible for a lot of people for a first-time purchase. To give you an idea, when I look at what's occurred in the townhome markets for those communities, they've done well, but they pale in comparison to some of the markets we're seeing outside of these regularly considered GTA communities. So usually we're looking at, Oakville, Burlington, Milton for first-time buyers. Now people are pushing into Guelph, Waterloo, Cambridge, Kitchener markets. So to give you some context, townhomes in Oakville for the last 12 months, the benchmark price has increased about 12.6%. But if you're looking at Kitchener, Waterloo, I've just got these numbers here in front of me, you're just over 27% for the same time period. So pretty much double the price growth. Now, obviously, you're dealing with lower prices, but we've seen in some of these communities prices starting out the year in the 400s, and now they're trading up into the high fives. So we're seeing a significant increase just in the last 12 months. That's being fueled by Toronto buyers who are now working from home more, so they're not as concerned with their commute times. They're pushing further out. So, obviously, these markets are benefiting. What's the long-term signal for this growth? A lot of people are saying that it's going to continue. So for 2021, we're going to continue to see a strong market. Looking in these markets right now, sales are still competitive. We're still seeing instances where you've got, 22 offers on a semi-detached home in Guelph. That, to be honest, the agents are listing for, $499, but they know it's going to sell for something like $575, $605, something like that. As buyers, it's difficult sometimes to shop in those markets because obviously your expectation is maybe not to pay $100,000 more than the list price, but that's the pricing strategy we're seeing repeat itself out in those marketplaces. Obviously, it's something that's new to a lot of those markets, is this influx of people from Toronto. They were seeing it for a little while, but it's almost like somebody took their finger off the garden hose, and now you're seeing thousands more people flooding out into these communities. We can't blame them, right? We see that the quality of these communities is exceptional. They're less crowded. It's easier to go to the shops, and in Toronto you're going to see longer lineups. You're going to have to share elevators if you're in a condo apartment. That's why this year the only market that we can see any price decrease is Toronto condos. So when you look at the overall trend for the year, they were up about 2% for these Toronto or Greater Toronto Area condos. But if you actually look at it for the last 6 months, they were down about 3%. So in the second half of 2020, obviously once the reality of the pandemic sunk in with all of the owners and the tenants there, they've decided to shift further west, and that's either caused the pricing to plateau or decrease slightly in some of these markets. A lot of landlords as well, because of the difficulties in the Toronto rental market, have decided to add inventory to the market by selling their investment properties. So that again excess inventory for something that's already seeing softening demand is only going to cause people to reduce the price further. So I think that trend could continue for 2021. It will only start to recover once this vaccine starts to be pushed out a little bit further. More and more people start to recover from this, and hopefully we can move past it, and people return to, going into the office a little bit more frequently. Or in fact, you start to see immigration return in it's more kind of full depth, and newer buyers obviously coming to the country as newcomers looking for something at a slightly lower price point. They may be entering that condominium market and help it to recover a little bit quicker. So guys, we hope these numbers were informative for you and to give you a little bit better context as to what people keep preaching, record low inventory. It's an amazing time to sell. It's a great time to buy because the overall long-term trend is that things are going to continue to perform very well. So if you have any questions, feel free to shoot us a DM through our Instagram or email us through our website, williamsfamilyrealestate.com.